You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means it is Wednesday, usually double header Wednesday. Today it is triple header Wednesday, listeners. The producers hate me, putting me to work here on a Wednesday, doing not one but two options boot camps. And then hot off of that, we crack the mic for none other than the Futures Rundown. But I'm excited. I'm raring to go to talk some futures. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. If you like what you hear, throw a like, a star, a comment. This is a brand new show after all, so those likes, stars, and comments and reviews go a long way towards helping new people discover the content. And then, of course, if you want to discover more content in your lives, head on over to the pro, theoptionsinsider.com/pro. If you did that, you could already be listening to this show live right now, as well as, of course, awesome pro Q&As, as well as options, oddities, giveaways, all sorts of fun. Theoptionsinsider.com/pro, the place to go to learn more as we learn who's joining us on the old Futures Rundown program this week. I'm pleased to welcome back our old pal. If you didn't get enough Dan over the last hour, we got Dan squared coming at you with our old pal, Dan the Man Gramza from Gramza Capital Management. Mr. Dan, welcome back to the show, sir.
Well, thank you very much, Mark. Great to be here.
How does it feel to be on the Dan squared day? The Dan Palooza, we'll call it.
I had never thought about it until this moment, but it's great.
We're all living in Danopolis.
It's always fun exploring these markets.
It's a Dan world. We're all just living in it, sir. How about that? All right. With the team assembled, let's dive right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, where we break down what is lighting up our tapes in the futures market this week. I will give you the list of the top 10 winners and losers, gainers / advancers, whatever you want to call them, out there at the end of the day. But before we get there, Mr. Dan, when you're not talking to us, you have your eyes fixed firmly on the world of futures. What is lighting up your tape this week, sir?
You know, a little bit of everything. We got the stock indices, which I think are acting very orderly. The U.S. dollar is stronger, which does make sense in light of our current economic environment. Interest rates, I think, are also orderly. They're doing what they should do with yields where they are. And if you look at energy, that also is acting as it should. I think for crude oil and nat gas, the ags, if you look at just the major grain products, we have some fundamentals out there that are really driving this market. And so I think they all have their story. That's what's so interesting when it comes to futures. We've got these environments that are common. They are all connected in some ways, but also disconnected when you think about individual drivers for those markets.
All right, Dan, let's break down some of what's lighting up the tape out there this week. Let's break down our winners and losers. Let me ask you, Dan, you're an experienced futures guy. Some people take umbrage when I say winners and losers because they say, oh, you could be short in the futures market, which is, of course, true. Do you take umbrage, sir? Do you think we need to change that title? Do you like, I don't know, what's better, advancers, decliners, limit up and limit down? Obviously, that's not true either, but it sounds cool.
No.
What do you think?
Yeah, limit up, limit down, I don't think would be good at all because that implies something totally different when it comes to the futures markets. And winners and losers implies something about I take it as what's moving up and what's moving down, not necessarily from a trade point of view. And advancers, that's probably not a bad one, I suppose. Decliners, that kind of defines what's happening. These are markets that are down, I suppose, a little more. But winners and losers, I get what you're saying about some people having a little problem with that, but I don't, because I take it the way you describe it.
All right. If Dan signs off on it, then I think it's cool. All you people writing in with your hate mail, to send it to Dan and not to me.
Please, sure. Send it on over.
You know what the problem really is, Dan? We took the good one for TWIFO with light side and dark side. we can't rip ourselves off. So now we're left with just winners and losers, which is not the sexiest thing. We'll keep workshopping it, listeners. But for now, yeah. Dan approves. So we're sticking. Next time, Dan, I'm getting those emails. I'm just forwarding them to you. Say, complain to Dan. He approved of it. All right, number 10.
Right ahead.
Number 10 in the winners category for this week, listeners. We're going out to the ags, all the way out to March in wheat, listeners, up 3.42%. From the ags, we go. Looks like we have a lot of March on the list, so interesting. Longer term stuff lighting up our tape this week. Number 9, we go to the metals. This time to the number 2 of the shiny stuff. It is March silver up 3.4. So we actually have a tie. 10/9, both up 3.42%. Number 8, back to the ags. This time to January to soybean oil up 4.13%. Number 7, keeping it in the ags, listeners, it's corn, the March contract. So again, going back a little bit longer term, up 4.71%. Number 6, going to the dairy, this time to the dry whey, Jan contract up 4.74%. Number 5, hard red wheat. It's as hard as it comes, listeners. The March contract there up 4.93%. Number 4, listeners, it's coffee. Coffee, you've been listening to the show for a while. You know that coffee's been on a bit of a rampage the past year, and so has cocoa. A lot of seed names out there. In fact, we got cocoa coming up in a little bit, but coffee gaining 6.72%. Again, that is in the March contract as well. So a good week here for coffee. Number 2, this is, if you listen to our TWIFO show, listeners, you know this product is nigh on inescapable. It is nat gas. Not going very far at all. We're going to Jan and nat gas, which makes sense. A highly seasonal product in nat gas. And Jan, right in the teeth of winter there. The nat gas Jan contract, this listeners, up nearly 11%, 10.98%. And the big dog winner this week, I kind of spoiled it, listeners. Another C name, it's cocoa. The March contract up 12.53%. Dan, we got quite the representative sampling in our winners for this week. We've got ags, we've got precious metals, we've got a little bit of dairy, we've got a sprinkling of coffee, a little bit of canola, and for good measure, some nat gas. Dan, what are your thoughts on our list of winners this week? Any surprises, any takeaways, sir?
I love it. I love it because whether you're looking at a positive or a negative market, it's always something going on. And with futures, with all the contracts that are available, there's always something cooking. There's always something on the move. That's why I'm never bored when it comes to those markets. Cocoa is one, though, that I think is really interesting in terms of its fundamentals and how it fits in on a global basis.
Were there any surprises for you, sir, in our list of the top 10 winners there?
Well, no, nat gas is doing what it should be doing about this time of year. Canola, that's an interesting product that's really heavily grown in Canada and Australia. It's rapeseed's another term that's used for it. Coffee, again, some fundamentals driving it that I think makes sense. Wheat, if you think about wheat, you got to think about Russia and Ukraine right now. Russia is one of the major producers of wheat, and they're having some condition problems, and it looks like Ukraine may have some transportation issues, so we want to keep our eye on that. Whey, if you look at dairy, that's where that really comes into play. Corn, no, we've got some positive things happening with corn. That's really on a move. Soybean oil, the same thing. You know, when we think about soybean oil, it's connected in so many ways. If you think about Ukraine. I mentioned them. They produce 70% of sunflower oil, which is used a lot in that region. If you look at Bulgaria, for example, they use a lot of sunflower oil. But with that market tightening up, it has an impact on palm oil. It has, which you could look to Kuala Lumpur for that, Indonesia. It has an impact on what you mentioned, Mark, and that's soybean oil. So they're all connected. China, major consumer of soybean oil, and it's all connected together. So, no, I think that's a reasonable look when you see that. Silver, it goes back to economic issues that we can think about. Same thing holds true for gold right now. Perception of the future, perception of inflation, perception of our economy. Perception of uncertainty. The precious metals are markets that rely on uncertainty in a sense. Inflation, geopolitical situations can really drive those markets. And that's some of what we're seeing right now. So I think about those markets, and now to the upside, it's reasonable, I think.
All right, let's see if our dark side / losers are reasonable, Dan. Again, if you don't like losers, listeners, send that hate mail over to Dan at dangramza.com. Number 10, listeners, on our list of big old stinking losers this week, listeners. We got the Dow futures off 1.61%. The DEES contract, there's been a lot of weight on the Dow of late, while some of the other indices have been doing a little bit of rally-ho. The Dow's having a hard time getting out of its own way, it seems like, of late, as reflected by coming in at number 10 this week. Number 9, we're off to cotton. Not cotton number 1, not cotton number 10. It's cotton number 2, listeners. The March contract off 1.88%. Number 8, U.S. Midwest Steel. The DEES contract off 2.33%. Obviously, there's a lot of back and forth on the steel side, given the pending prospect of tariffs going on over there. Number 7, to the ags we go. It is to the livestock this time, though. Lean hogs, this time to February. So we're all over the place on the expirations on the losers this week. February contract off 2.61%. Number 6, we're going to straight equity volatility. It's the DEES VIX contract off 2.78%. Again, don't send your hate mail, percent to percent. I don't care. I've moved on. You need to move on too, listeners. Number 5 and number 4, we take them together. They are the DECE Ether futures, the micro and the regular, off about 2.85 and 2.86 respectively. Number 3, as the Brits say, the old rolled aluminium, the Feb contract off 3.2%. Number 2, back to the Ags. It is oats all the way out to March. Listeners, the March oats contract off 4.22%. And the big dog loser, I should say, the big loser of the week here, listeners, is lumber, physical lumber, the Jan contract off 4.92%. Mr. Dan, sir, any surprises for you in our list of losers, the Dan approved list of losers this week, sir?
Well, before I say anything about these, Mark, can I retract my thoughts? You got me thinking as we're going through these markets. I think the word here, maybe losers, instead of losers, decliners.
Oh, see, now you're back. They got to you already, didn't they? They already have sent you the emails. The big losers lobby. They've already paid you off, Dan.
I like the term that you use it. In my mind, it fits. But for someone who may not be familiar with these and thinking about it, decliners probably is a better word, and the other ones are advancing, so that's a positive thing. And there is opportunity in all these markets. That's what's so great about trading in general. Who cares if it goes up or down? I don't have a bias. I just hopefully find the opportunity that the market gives us. And this list that we're looking at here, I don't think there's too much here unreasonable in terms of market action. Some of these are kind of thin, so there's not, for me, not a lot to do with them in that regard. The Dow, and maybe people are wondering, well, hold on a minute. Why is the Dow down if other indices are up, like, S&P and the NASDAQ? Well, you want to remember, it's the calculation of the index that makes the difference. In the S&P and the NASDAQ, they're capitalization weighted, which means you take the price of the stock times the number of shares outstanding. That gives you the capitalization of that stock. So if you have high-priced, high volume in terms of outstanding shares, those stocks are going to have a big influence on the index. Here, when it comes to the Dow, it's an arithmetic index. It is not capitalization weighted. So the impact of stocks on this index is different than it is in the other two. So they don't necessarily march to the same beat of the drum in terms of direction. So that's one of the reasons why you're seeing the Dow down a bit, where you may see the other indices up.
All right, listeners, and if you're wondering how much of this price action on the week is coming for today, let's look really quickly what are our price jumpers today here, listeners. Let's go to the green side first. We got a lot of crypto popping today, listeners. Number 5 and 4 are both ETH popping over 4% just today. Number 3 and 2, it's all Bitcoin, listeners. Bitcoin popping 4.75% on the future side today. But nothing can unseat the king today, listeners, which is Nat Gas popping 5.41% just today. Moving to the red, listeners, we have number 5, again, the U.S. Midwest Steel losing a little over 0.5% just today. Number 4, we have the Ultra Bond off 0.6%. Number 3, we have physical lumber off also 0.6, about 0.62%. Number 2, we have the VIX giving up 2.61%, and the number 1 loser on the day is coffee off nearly 4%. I could run through some of the most actives for today, listeners, but you know what? I want to make sure we have some time to get to one of our topics that I know has been puzzling a lot of you, and I think who better to do it with on the show here than Dan? So without further ado, let's get into a little bit of Futures 101.
It's time to shine some light on this mysterious marketplace. It's time for Futures 101.
All right, listeners. Welcome to Futures 101, where we attempt to demystify this sometimes mysterious, arcane, intimidating, just obtuse marketplace known as futures. And today's topic is a frequently asked question for a lot of you out there, which, Dan, it all boils down to pretty much why the heck do futures month codes, why do they make no sense, Dan? That's the question we get all the time. And you know what, listeners? I feel your pain on this one. The month codes for futures, I think to call them impenetrable, kind of weird, off-putting, bizarre, I think all those adjectives apply. If you're not familiar, listeners, you're very new to the world of futures, just type CME contract month codes into your browser. Again, we're going to go off CME. They are the big dog in the futures world. There are other exchanges that do things differently, but for a lot of what you're trading, it's going to be through the lens of CME. Allow me to just break down the contract month codes for you, listeners. So our year begins. Again, these are the letters that are associated with the month. So you might say, okay, the year starts with January. The month code for that is going to be A. That is a very understandable assumption and makes a heck of a lot of intuitive sense. And you would be completely wrong, listeners. The year starts with F. The month code for January is F, listeners. And then from there we proceed on a little bit of alphabetical pace. February is G. And you say, okay, I kind of see what they're putting down now, maybe a little bit. March is H. And then you say, okay, so April is going to be I, right? Nope. Rip that assumption right off the board, listeners. April is J. Then we get to May. That's K. Okay, so now we're starting to move along certain lines again. Say, okay, June's probably going to be L, right? Nope. Rip that assumption right off the tape as well, listeners. June is M. And then July is N. And then, of course, now you get into August. You're saying, okay, I get maybe some of the other ones, maybe, but August is going to be O, right? Nope. We leap right to Q, listeners. And then September is U, and then forget about R's and T's and S's and everything else you're going to expect coming along the lines. Because we go to October, we jump right to V again, listeners. And then November is X. Maybe the one on the board that you could point to and say, okay, that one makes the most sense intuitively to me is December, because December is Z. So at least they did something right. They ended the month codes with a Z. So at least you know you're getting something out here. So let me give you a quick example of how these are used. Listen, let's say you're trading crude oil. So the root symbol for crude oil is CL. If you've ever traded WTI, you know you've seen that symbol around, CL. So if you're trading, let's say, the December 2024 WTI contract, the symbol for that is going to be CL. That's, of course, the root product symbol. And then Z for the month of December, and then 24 for the year. So put all that together, CLZ24. I know it's an alphabet soup of nonsense, but that's what we have to work with. Dan, we've received this question many times. I can't think of anyone better to discuss this with than you. You've been in the futures trenches for a long time. Explain to our listeners, Dan, why does the symbology work this way? Why does it make apparently no intuitive sense when you first look at it, sir?
Well, first, it does not make sense. I remember when I first started looking at these, I thought, what the heck? At least in the stock options, some of the symbols there made kind of sense. In futures, it doesn't seem to do that. And your explanation, Mark, was by far the best explanation I have ever heard for symbology. And I like the way you did that, Mark, because they do leave out some letters. And you wonder why not? Why not keep it going? Well, there are some issues that I think we do want to be sensitive to. And that is, remember, everything was done on paper. So a typical way in the agricultural market, it would be done by paper. So you call the floor, or your broker would call the floor. The person answers it. They write down what you've asked them to do. First, what account is it, the quantity, and then the month, and then what you're looking to do, buy, sell, and then at what prices, or is it at market? They timestamp it. They give it to a runner, a person that would now run from that phone to the pit. Give it to a broker. Broker looks at it, puts their hands in the air to execute the order. That would be an order being passed by paper. And if you had I and L and those kind of letters, that could easily be mistaken. And mistakes could happen when you're doing it that way. The other evolution that came along was hand signals. In some pits, you could do that. So it's very common in the stock indice pits, for example, or crude oil in New York on the floor there. They also did it they referred to it as arbing, a symbol, or arbing an order. So now instead of writing it down, the hand's put in the air. If the hand is facing towards you, you're buying it. If it's facing away from you, you're selling it. So you're telling a clerk in the pit what you want to do. So if you want to sell, your hands now, your palms towards them, you take it, I'm selling it. But when you touch your face, you're showing quantity. So if you put an index finger on your chin, you're buying one contract, and then you'd have to tell them possibly what that symbol is, what it is you're trading. If it's a dedicated pit, you don't have to worry about that except for the month, because in different pits, different months could be traded within that pit. So, for example, the euro dollar pit, that had, that traded out many years into the futures, 10-years into the future. So there they use different colors to represent years instead of the numbers, flashing the numbers. So the hand signal, if I took it away, my hand away from my face and put it to the side, now you have to show price. And if you're showing one, your finger would be up in the air. If you're showing a half, you'd wiggle that finger. That means it's a half of a price that you're looking at. So in grains, they trade in quarter, halves, 3/4, or trading in quarter increments. So that would be what the next thing you would tell them. So first, you put your hand on whether you're buying or selling, your hand in your face to show size, and then the price on the outside. And if you think about some of these things that we're looking at here, that has an impact on all these. So you want, January, June, July, all have J's. And do you want a J in there, or do you want to eliminate that? So I think it's just the way the market's evolved. In the late 1800s, early 1900s, they would say the whole thing. There was no short symbols. But as the markets evolved, they needed some system to do it. And I totally agree with anyone who says it seems kind of confusing. It's because it is kind of confusing. But here's the blessing that we all have. It's today's technology. When you go to a broker's platform and you get ready to trade futures, they'll have a guide for you. They'll help you make sure that you're putting in the right symbol, the right month, the right code for that. There'll be a guide to help you with that. So technology is the blessing. And the mistakes that you would have on the floor kind of gone away now because you don't have the out trade, which is referred to as an out trade. If I said 50 and you said 15, you thought I said 15, we execute an order, but wrong quantities or the wrong month. Those out trades, we really don't have them now with electronics. So as crazy as it is, it's actually fairly organized once you get used to it a bit.
Yeah, we did some digging, Dan. This is the topic that, when it comes back to the symbology, if you ask 5 different people in the futures world, you'll get 5 different answers as to why they use this exact symbology, especially when it comes to the contract month codes. That's what we're fixating on here, listeners. So I did some digging, Dan, and let me know what you think of this explanation, because this is kind of the best we could cobble together for why they use this somewhat obtuse nomenclature. Goes back to the early days of the exchange. Dan was talking about hand signals. I remember those days very well. One of the first things you had to learn when you got down there was, of course, arbing or hand signals. But even before all that madness, before the electronics, there was ticker tapes. And the exchanges began to disseminate their transactions via ticker tapes. They needed some sort of code, some sort of shorthand to define months and years for contracts. Now, they claim here in some of the research we did that the letters A, B, C, D, and E, which are your obvious starting point for any contract month codes, those were kept in reserve for some static data related to futures. I don't know exactly what data they were referring to, but for some reason, back in the day, you could not use A through E. Those were kept in reserve. So that meant your first letter you could start with was F for January, which is what they did. And then they went through alphabetically until they get to April. They were concerned that I could be confused with L, obviously upper and lowercase I. So that's why they skipped I for April and they go to J. Once again, when you get to June, why they skipped L, same reasoning. They think a lowercase and uppercase L could be confusing. So they eliminate that. They go straight to M for June. I could not find any good reasoning why they skip R, S, and T. If you know, listeners, by all means, write into us. None of our research really revealed why they skipped those. September, obviously, was in order. October was V. A W, from our research, people claimed that it looked too much like a V, so they didn't want any confusion there. You can see a lot of this traces back to avoiding confusion, listeners. Why? Why they skipped Y? No one knows why. Y is another mystery, listeners. I think at that point they realized they were already off the rails. We might as well at least end with Z. You can't end on Y. That would be weird as well. So I'm going to chalk that up to a little bit of common sense finally invading their logic, which is why, listeners, we have this patchwork stream of nonsense known as the contract month codes. You can blame the ticker tapes. Dan, what do you think? You sign off on that, or do you vehemently disagree, sir?
Mark, I think you're onto something. Because on a ticker tape, there was all symbols only had so much room that they would put on that. And I think that's very good, especially for the I and the L. That one could easily be confused. And, the idea was to make it fast, short, because you want as much information going through the tape as you could get. And it's fascinating to me. I think what you're saying is logical, and the tape would be a good reference for that symbology, which we're stuck with.
Unfortunately, we are stuck with that symbology, Dan, but we're not stuck with this show. That music means we have come to the end. Listeners, I'm curious if you have any pet theories as to why a particular month was skipped. By all means, reach out. We know we have a lot of listeners who have been in the futures trenches for a long time. Maybe you say, hey, I know exactly why they skipped Y or some other month out there. Hit us up. Let us know. You folks have not been shy about reaching out to the show. We appreciate you all at the end of the day. And Dan, we appreciate you coming on to join us to talk some futures and try bravely to explain the madness that is futures symbology, sir. Well done.
Well, it's always a pleasure to be with you, Mark.
And Mr. Dan, before we go, if folks want to check out what you have cooking, maybe they want to reach out to you to discuss some symbology or to give you, I guess they've already reached out to you. They've already gotten to you on the winners and losers. We can't use that anymore. So thanks, Dan. But if folks want to reach out to you for other stuff, where should they go? What should they do?
I have a website, dangramza.com. I do a daily video There's a free video, and there's also a more advanced video and a course. But the free video, every day the market's available, that's there. We talk about some of the fundamentals driving a market. I select out of 22 different markets, 6 different sectors. We go through each one in the advanced video. The free one, I grab a few that are cooking for us to talk about. You'll see red and green lines, which represent buy and sell signals. These are not buy and sell recommendations, but just want to show how a trade could be identified and managed. And you can go back over 10 years to look at what those videos, what I was saying in those videos back 10 years, just to give you a reference of what's going on. So if you've never looked at futures, that could be another reference besides listening to the show that you may want to check out.
Check him out. He's got great stuff there. Dan Gramza, GRAMZA.com, the place to go in between listening to episodes of this program. And of course, while you're searching for things online, visit our friends over there at ctsfutures.com. They are the reason you have this show on your device of choice. After all, listeners, or just type T4 futures and options into any browser on Google. Once you get that, you get a code to get a free month. So kick the tires and light the fires over there at CTS Futures. Tell them you heard about them on the Futures Rundown. They'll be very happy to hear from you. That's going to do it for us on our triple header day. I finally get to rest my voice, mercifully, listeners. But then I'm back again tomorrow with just a plain old double header. This week in futures options and the option block. Friday, of course, volatility views, and we're back one final time exclusively for our pro friends with a little bit of options oddities where we talk the weird, the wild, the wondrous paper that is lighting up the options market. If you want to check that out for yourselves, only one place you can get it, theoptionsinsider.com/pro to learn more. Then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
Thank you for tuning in to the Futures Rundown, proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 theoretical sheets, strategy solver, MBO, advanced charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.